Hi, I'm Val the Realtor. Welcome back to my channel. Happy March! With March, it starts the beginning of the construction season. So this week, we're going to be talking about pre-construction investments. But first, if you're as passionate about real estate as I am, please hit that subscribe button. Like, share, and comment below. We hope to have very interesting content coming up this spring, and we hope to see you back each week. First, let's start talking about what is pre-construction investment. As the name suggests, it's before something's actually built. So often you're buying off paper. You may not have a show home, and it can be any form of construction style. Most commonly, it is condos that are apartment style, but it can be townhouses, villas, and even detached homes. Pre-construction investment has been very popular over the last 15 years. You get in at the ground level, kind of at a wholesale price, and by the time the construction is complete in a couple of years, hopefully you've got some built-in equity by the time you are handed the keys. Often, investors like to flip them. There is some risk with doing that, but there can be some reward because you can have some very easy equity that would have a greater rate of return on your capital than if it sat in the bank or any other financial investment. However, there's so many market influences that today I want to actually talk about the risks as well as the rewards with pre-construction investment. One of the great things about pre-construction investment is it's very affordable to get in. You only need as much as $1,000 to put a hold on a property. Within about 10 days or 2 weeks, depending on the builder, you'll have a condition period. They'll require a 5% down of the purchase. Some builders, that's all they will require, and they don't need another penny from you until closing, maybe a year later. But for some projects, particularly the condominium apartments, where it's millions and millions of dollars of construction cost to put them up, they will want perhaps another 5% prior to closing, or an insurance bond that says you're going to be good for the 5% on closing. Or if you're a first-time buyer and you're only putting 5% down, the insurance policy is guaranteeing that you're going to close. So it differs from every builder, but some projects can be 2 or 3 years out. So this is a very economical way to get into the market, and you can be saving money in the meantime. Sometimes a builder will even have a financial institution that is going to lend on your mortgage at closing. So there's a lot of benefits to buying pre-construction because you don't go through the typical mortgage process that you would if you were buying your primary residence or a rental property. Pre-construction definitely has some risks that you need to consider. If you plan to flip the property and put it up for sale when you take possession, especially when you purchased in a multifamily complex, expect that there will be others flipping their investment too. This is for short-term investors that were going for the quick appreciation between the pre-construction price and the current market value. The more investors that list, the more competition, and the more likely you will have a reduced rate of return and a longer marketing term. You will also need to add the costs of selling the property, such as legal fees, commission, and any interest or carrying costs that you'll have until it sells. Right now, there's another risk. The cost of construction is rising, and it's rising daily. Pre-construction usually capitalized on much lower costs, and the market adjustment hasn't caught up just yet. That means the cost you are paying to build right now is higher than it has ever been, and while prices are increasing with that, they may flatten back out once this property is built and the cost of construction comes back down. You may not have the equity upon completion that you would have had in previous years, and it is something that you need to factor into your investment. Another risk is that many investors are also planning to rent, which is great. We need more rental options in Calgary. Remember, when you get the keys to the property, so will the other 199 investors in that pre-construction condominium, and initially your rental income may be delayed or reduced, depending on how many others choose to rent. If the project is offering property management, you can bet the majority of investors will be putting up their unit for rent. Hope you picked a good unit and not the cheapest one offered. Another thing to consider is if you're buying your investment because you plan to live in it, be aware that you might be in a building that is largely tenant occupied. The fourth risk is that rents fluctuate. So most investors want to make sure the rental income is covering all the expenses. So in the case of an apartment, which is the most common entry-level investment, you're talking about your condo fee, your property tax, and any mortgage payment. What happens if you bought in 2018 and the project was complete in 2020 and all of a sudden all of those young renters that you were counting on went back home because COVID started. So you have to be aware that rents fluctuate, your income will fluctuate. On the other hand, what if we had some kind of large event coming and your unit became available? Then your rent income might actually increase. So you have to factor that into your rate of return. The fifth risk, of course, is the condo fee. It's something that always goes up and nobody can control. Builders tend to leave a low condo fee at the intro level when you're looking at pre-construction because they want to make it attractive as an investment. You can pretty much guarantee within the first 18 months that condo fee is going to go up. One of the reasons is because they create a budget for that condo fee at the pre-construction level, but 2 years later, insurance premiums go up, property management charges more, there's all kinds of increases that they maybe didn't calculate. We've had a couple of years where there's been big hikes in condo fees, even for the resale market, that we never anticipated. So you should also, when looking at your costs, look at a higher condo fee. In fact, you probably could factor in an additional 20 to 25% hike just in case. Where there's risk, there's also reward. The first reward, of course, is market appreciation. In most cases, can be assured. Most people looking to buy a property need to live in it, usually within 60 days, which is why pre-construction is just not an option for them. But once it is built, it is ready for occupancy, there's a natural appreciation over what it was worth on paper. Hopefully the market appreciated as well, which it usually does to some extent. People who invested in 2004 found that they could sell their property for double what they paid by 2006 when the project was complete. Although that rate of return has disappeared, there is still some market appreciation, often in the double digits. The second reward, of course, is once you rent it out, you have a steady stream of income to apply to the mortgage. It is nice to have somebody else pay your mortgage. The third big reward, of course, is the mortgage itself. It has interest, and it's the highest in the early years of your mortgage. This is going to be a great deduction against the rental income, helping to keep your tax exposure very low. So how can we mitigate your risks and maximize your rewards in pre-construction investment? Well, my first tip is buy the best unit you can afford. Most people do the opposite and buy the cheapest one. And then the building is complete and all of a sudden they're on the north side of the building looking into the other building, or they're facing out onto a busy street where you can't even open the windows, or they didn't spring for the air conditioning or the stainless steel appliances. So tip number one is always buy the best that you can in that building. Having the superior unit will command more whether you are reselling it or whether you are renting it. So think about the square footage, think about the outdoor space, because some of them have an option for a balcony and some do not. Think about parking. I've seen a lot of people that made the mistake of not buying the parking stall. Buy the parking stall. And then also look at your sun exposure, the bedrooms, even the placement of the laundry. I've seen one pre-construction project where they're putting the laundry in the master bedroom. Well, what if you get two people in there as roommates? Is the other roommate going to want someone coming into their bedroom to do laundry every week, especially if it's in their walk-in closet? So you have to think a little bit about the floor plan for your overall investment goals. Next, do your research. If you have a building, for example, that has mixed zoning, so there's some commercial space, which is going to be retail on the main floor, and the rest is going to be residential, double check if there's an ECR agreement. It's very important because who's kicking in for all the pedestrian traffic coming in off the street through your lobby to shops, for example, or the wear and tear on the guest parking lot out back. If they're not having an agreement in place, that those retailers will also have to kick into the condo corporation. You have to also think about the builder, and you have to think about the property management company. Fortunately, we live in an online age where you can do a lot of Googling and find out reviews and ratings of both and how long the builder's been around. So make sure you do your research. The third and probably the biggest tip I can give you to mitigate all the risk going into pre-construction is hire a professional. A realtor can definitely help you with your pre-construction investment, but I would also consider having a contract looked over by a lawyer. I'm starting to see escalation clauses, which allows a builder to do a cash call for you if the cost of construction continues to rise while they're building. You don't want to be hit with any hidden fees because it'll affect your bottom line for sure. You also might want to have a condominium document review. Now that seems far-fetched when the condominium hasn't fully formed yet. However, There are some condominium documents that will be available to you at the time of purchase, so you want to make sure you get a professional to look over the budget, the bylaws, and any other agreements that are coming with this complex to make sure they coincide with your real estate investment objectives. Thanks for watching this week's episode on pre-construction investment. I hope you learned a lot, and I hope you feel much more confident in investing in your next property. I put out a video each week, so please hit the subscribe button, like these videos, comment, and share. I'm very passionate about real estate and have a lot of great upcoming videos on this channel. See you next week.